there's not really a whole lot of bearish patterns really anywhere to be found right now. What is up, guys? Norse Digital Assets coming at you with another video. I've got a good one lined up for you today. Today we are going to cover the king of the market again, once again, Bitcoin that controls the market, sets the tone, all that good stuff. So we are going to cover Bitcoin for obvious reasons, and I will let you know what I think about the bull market and the bear market in this video. We'll kind of get some of that squared away, maybe give you a little bit of hopium, I don't know. But yeah, let's dive into the Bitcoin chart here. Let's go to the weekly. So my overall, just to let you know, my overall thoughts right now on the market, we are in a bull market. There is still plenty of upside possible. Could I be wrong about that? Yes, I could be wrong, but I'm going to show you the probabilities here. So we have the low. We have the higher low, and we still have higher lows here. We have not lost any structural support. We've tapped off the 55 EMA here on this wick. We tapped off of it right below it on the 1414. We're still above it. We haven't lost the 55. We haven't lost this low here. If I just drop this line in here on the bottom of the candle bodies, and at the bottom of these wicks, we haven't lost that support. First one being at 42996 and the other one being at 39551. This is something that would start to make me start to go bearish. You fall below this 39,500 and you hit your head on it, and you hit your head and you continue to roll and you are losing your support. That is where I believe you are possibly entering into a bear cycle, a bear market. Don't know how long it would be, but that is where I would start to change my mind. That would be, if that happens, you could definitely have a movement for Bitcoin down towards, let's erase that, down towards $30,000, which would be down here. That is if you lose support. Currently, you have not lost any support. There is no bear market call right now that's legitimate in my eyes. If anything, it's a premature call that could turn out to be correct later, but right now it's too early of a call. We haven't lost any support. Everything in TA, everything here is about support and resistance, support and resistance, support and resistance. Right now, we are still creating a higher low than this last low and this low, a higher low, and a higher low. And we are holding that support right now like we have been over the last few days. We haven't lost support. Until you lose support, there's no reason to be calling for the bear market yet. Now, some of these people that have called it, in my opinion, that's a premature call, and they could turn out to be right later, and they sold their positions, etc., etc. So they were kind of ahead of the curve and took less of a loss if we go into a major bear market, or they lost less of their profits if they took profits, etc., etc., etc. But at this point in time, it is a premature call, and there's not really a whole lot of bearish patterns really anywhere to be found right now, in my opinion. You can also take a look here. You can see down here the stock RSI here on the weekly, real low down here. And typically when this is lowing out, it's consolidating for a movement back up to the upside. You see that here, and that's a bullish sign here. There are a lot of people on crypto Twitter and just in general calling that we're in the bear market and that to pack it up and that it's over, etc. The sentiment has really changed over the last week or two. It's really gone down, especially in the last 2 weeks. But in the last week, the sentiment overall has gone down in the market, which could potentially be looked at as a bullish sign, because just like through here, this is This is all summer long here, and just like through here, it was the same. The sentiment was terrible. People were calling for 20K. Some people even started calling for 10K Bitcoin, and it was over, et cetera, et cetera, et cetera. And then look what happened. We came up, came back, found support, and went and set a new all-time high at 69K. Think about what people were saying down here. So right now, we've lost no support. The first warning shot potentially of losing support would be losing this 55 EMA, which currently sits, and this would be the first warning shot in my opinion, because at any rate, you can still come down to this and bounce off it, and you're still bullish. You're still in a bull market. It's not bearish. So the first warning shot, if we were going to be going into a bear market, which I don't think we are, I believe we're getting ready for continuation. The first line of support would be roughly $43,800. That would be the first warning shot. Going below that, and the next warning shot would be somewhere at the bottom of this wick during this week here when we were much lower. When it was the week where we were trying to, this was in September, where 40,000 was our new floor. It was like 39, 40,000, and you can see that in this wick right here, and I just dropped that line in there. So I would say, looking forward, the forecast over the next couple of weeks, next month, the forecast is this. Start to roll below 43,000 and lose the support of 43,000, and then hit your head on 43,000 and kind of get stuck in this 42, 43 range. And then that would be warning shot number one. And then falling below this 39,800 roughly, falling below that, hitting your head and losing that support, that is where I would be saying bear market. But right now, you can't call that. It's too early of a call. We're holding support just fine. We're holding support. We're at 48,000. We've been holding nice support in this range here. If you look at the bodies here, the candle bodies here, we've been holding support at 49, 49, and this week, or right now, is 48. So 49, 49, 48 over the last 3 weeks. We have some wicks that are lower, but currently right now we are fully holding all support necessary and needed to hold this higher low that's a higher low than this one here and move on for continuation. Here's the key point of this video. Hold support. When you hold support, you're gearing up for continuation of the trend. What is the trend? The trend is an uptrend. We have been in an uptrend since back here in July, and even before that. That's a correction in a bear. That was obviously a correction in a bull market, and we've been on an uptrend through here. Hold support, hold support, hold support. You hold support, and you are getting ready for continuation of the current trend. And what is the current trend? It is an uptrend. So hold support where we are at currently. Hold support above this 55 EMA, which is roughly 43,800. Hold support above it, and you are gearing up for continuation of the bull market. Now, some people like Blockchain Backer and some of these other people that put out videos, first of all, they're charting much differently than I am. And I believe that their outlook is too conservative for a new asset class, which is cryptocurrency. It's a new asset class with a lot of adoption and FOMO surrounding it, and a lot of hype and speculation. And this asset class has already been growing at speeds that we've never really seen before from any markets. So I believe that when some of these other influencers, they put these videos out, what is that based off of? It is based off of the linear Fibonacci 4.236 that a lot of these people use, that I do not use on this channel hardly. I mean, I know how they do it, but basically what they are doing is they're taking a fib like this. They're setting their fib, but within their fib settings. What they have is down here, their fib levels are not based on log scales. So their fib levels are off. I turn that off. You see how the numbers come down. And then they're using a 4.236 here, linear. And I just randomly dropped this fib, and this doesn't mean anything. I'm just showing you for example. And they are calling that it topped out at the 4.236, or it almost reached it, and now it is rolling back. I believe, like I just said, that using the fibs that way on linear, not on log, and then using the 4.236 like that, sure, I definitely could be accurate at calling tops at different times for various altcoins in the bull run. I'm not going to discount that. But at this point in time in the crypto space, I believe that non-linear fibs, linear fibs like that, using the 4236, I believe it's just too conservative for this asset class with the adoption, with the institutional money that has come in, with the last couple months. The last couple months were awesome for the crypto space, and you can see that obviously through here. You can see it, all this green here and all this green here on the weekly. So that it's been very bullish, the sentiment, the adoption, etc., 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 which I've covered on this channel many times before. Let's just erase. Let's get rid of all these drawings. So my point is, right now, until that happens, where we actually lose some of these support levels, which I showed you the first warning shot would be losing the 55 EMA, which is the red line, which is roughly that 43,800 area, 43,500. Until losing that, you don't even have one warning shot. So right now it is premature, and that's not what I see. You also have things like the supply going down in a major way for the most aggressive way during a bull market, during a bull run, during what we were supposed to have possibly the peak in November, December, a massive run up in Bitcoin supposedly into January, into February. Well, it hasn't materialized, obviously, but we've never seen this time during a 4-year bull run where the supply on exchanges has been dropping in such dramatic fashion still. So we haven't seen that before either. So like I've said in my previous videos, it just doesn't make sense that the bull run would actually be over and that things would be going down. I do understand that the Fed is going to be tapering possibly, and they're not possibly not printing as much money. They're not giving out as much money as they were during the last year or two. A lot of money was being handed out, and then people were spending that. People were putting that into market. So I understand that fact. I watched a Raoul Paul video the other day, and he was speaking about that if you're putting more money into your gas tank, if you're putting more money into food, if you're, because of inflation, you're putting more money into housing, etc., there's less money out there to go into the market. And yes, that might play a small role into what is going on right now. Very possible. Maybe January will be great. Maybe 2022 is the year of crypto, and it'll be something. It'll just be wild. It'll be beyond our wildest dreams. Who knows? I will take us back to add to that. I will take us back to my other chart here that I've spelled out many times. This fact that the 2017 bull run and this current bull run is very similar. You come up to the 1618. You come back to the roughly to the 1414, you're a little bit above it here, and then you run up, you hit your head on the 1618, you come down, you find support on the 1272, you come back up here, you find support on the 1414, then you head to the 1618, get rejected again, so twice on the 1618 here and here, which is roughly $61,000. You come back down, and you are currently finding support just above the 1414. Let's zoom in here a little closer and get a better look here. Let's erase that. So where we are sitting is a little bit above the 1414. The 1414 is a little lower than the 55 EMA, like I said, which is that wick to exact right there. You can see. So we're sitting a little bit above it right now. But it's the same sort of pattern, the same sort of structure here. Same sort of structure where you get rejected on the 1618, come down, find support, and then this last bull run just shot right through. During this whole time, though, the DXY, the dollar currency index, was taking a massive shit. And now, right now, the DXY has been showing crazy amounts of strength with a bullish cross on the weekly time frame, and all this movement right here on the weekly out of the DXY. So the dollar somehow the dollar just continues to climb and climb and climb. The dollar typically a lot of the time, the dollar, the DXY is inversely correlated to Bitcoin. They move in opposite directions. So when you have this massive, you have this here, it wasn't a dead cat bounce. I thought it could have been earlier this year, probably a month or two ago. Didn't happen at all. We have this W double bottom, and it just boomed out of here. You get the bullish cross here. How long will it last? I don't know. It's looking pretty vertical. We'll have to wait and see. This chart typically moves opposite of Bitcoin, so that probably plays into what Bitcoin's doing also. Let's go to the daily on Bitcoin, cover one more thing, and that's going to be it on this video. So what is Bitcoin doing on the daily? Well, it's almost like it's starting to build its own little shelf of support here in this new price zone here. You can see if I zoom in here, I dropped in a trend line here. We were sitting on there for 4 or 5 days here back in September on that same level. We sat on it here a little bit, but through here you got 6, 7, 8 days where you're just sitting on that, you're hitting that price level and sitting on it and revisiting it either at the start of the day or the end of the day, either red or green. You go back and you're visiting that line again at 46,908, and we're kind of building our own little support shelf right here currently right now. Can we get a little momentum? I don't know. We'll have to wait and see. Don't know what the next couple weeks are going to offer. I don't know what January is going to offer, but overall, right now, I laid out what I think about the market. Right now, we have lost no key support levels. We are still in a bull market. I believe there's going to be some continuation. I just don't know when. Could I be wrong? Yes. This is just kind of a summary overall. And that's basically what we have going on with Bitcoin. There's not much else to say right now. Sorry it took so long to get all this spelled out for you. Please click the subscribe button down here in the bottom right-hand corner. If you can see my logo, click it, click subscribe. Smash up the like button, leave a comment. What do you think about Bitcoin? So back on the weekly here, take a look at this. So an ascending triangle here that's playing out. The only way that you'd be able to draw something like this is if you have a low, a higher low, and then a higher low. It's not going to make any sense if you have a low and then you have another low that's about the same and then you have another low that's about the same. You're not going to have an ascending triangle, basically, is my point. So you're coming up into an ascending triangle, a massive ascending triangle, because we're so zoomed out. Coming into this triangle is December 20. This is 1 year ago. You're coming up into ascending triangle. Then you're bouncing around. The continuation, when you are coming up into an ascending triangle and then it's an ascending triangle, the probabilities are to the upside out of an ascending triangle. So who knows? Do we bounce around in this triangle for a while? But the reason we can draw it is because of this low, the higher low, and the higher low. And some of these wicks here are tapping right off of it here. And this is sort of a pattern that we're kind of looking at here also. So this is kind of some hopium for you. And again, stock RSI, real low. How much lower can it go? You know, on the weekly, you're getting oversold and corrected on the weekly while still holding that higher low that's higher than this low that I've talked about many times in this video. So that is going to be it for this video. That's all I have to say for now. I'm going to try to condense it in the next video that I put out like this. And that's going to be it for this one. We will catch you in the next video. See ya.